Courtney covered a lot of it. They did have some weather early in the quarter. They had trouble moving through some goods that hurt their profitability levels. But they tried to insource a lot of the problems so that that they can control them. The women's fashion issue, the tourism was obviously external. But as we look outside of Macy's, we see demand in this category decelerating. Where we got very concerned was the conflict between the CEO's comments that, we think the U.S. consumer is healthy. We did beta test a few price increases, and there was just no appetite for it. Very hard for us to live in a world where traffic to these shopping centers is negative and there's no appetite for pricing, and you've got this looming threat of the cost structures getting even worse if tariffs come through. They spoke to some confidence to be able to handle a 10% tariff. 25% is a different ballgame, and we wake up every day, we don't know which way the ball is going to bounce on the tariffs. So the market's discounting that right now. The market does not think we're going to have a good holiday. Macy's, frankly, I think the stock is making a bet that they didn't take their expectations for the back half down enough. They think that they can self-correct some of these issues and be off to a better.
Are the most vulnerable players in this store category those that are principally mall-based stores and not necessarily discount stores? In other words, if I look at a Kohl's or a Target or a Walmart or any of a number of other TJ Maxx, most of those are not in what I think of as large malls. They may be in strip malls, but not large enclosed malls, and they are more and they are not these that I'm talking about, the Nordstroms, the Pennies, and so forth. They're not the discounters.
Right. Yeah, the malls are a very easy target to pick on here. It's been just persistent traffic declines. The consumers have moved away from that. There are periods in time, and there are different retailers that are off mall that see better trends. I would say it's more idiosyncratic to the company. TJ Maxx offering the consumer value. They continue to win. Ross Stores, Burlington, the whole off-price group continues to win. Kohl's is in a little bit of a different situation. Their trends really didn't decouple from the malls. Their traffic was I would say, no better than the Macy's of the world for a while. They've just turned down the ability for consumers to return Amazon Prime purchases in their stores. It sounds like the traffic is accelerated there a little bit. So they've got a couple of initiatives that are a little bit different, but we'll see how sustainable those are long term. Traffic to these brick and mortar stores is just not encouraging right now.
Courtney, when Michael was talking about beta testing price increases to customers and them just simply not going for it, it made me think that should the tariffs ever come into effect, given Jeff Gannett's comments to you last quarter, right, they will just have to eat that as well. There's no way to pass it on to the consumer.
Right. I mean, and that's the tricky thing. I mean, basically, we talked to Macy's today, and they gave us an example of some suitcase brands where they tried to take that percentage step up when the tariffs moved from 10 to 25%, and the customers just didn't buy those brands. So it is a difference from what he told me in May before he did this sort of practice test. And you're right. He just said, look, they wouldn't go for it. 10% we can figure out. 25%, as Michael suggested, we've got some work to do to figure out how we're going to take that if we cannot pass those price increases along, which he previously said he was going to have to do.
So if we don't get a reprieve, Michael, come December 15th in terms of the tariffs that would impact Macy's goods, how much do your estimates have to come down at that point, given what you know about consumers balking at price increases?
I think we have a little more work to do on that. I thought the 10% increase for Macy's would cause a little more panic. You could see, the CEO Jeff get on TV on your channel and express significant amounts of concern. I've been sitting next to these executives at every step of the way on Brexit, on tariffs, those kinds of things. This is causing a lot of concern. They're very concerned about it. Today they came out, they said, we think we figured out how to handle 10%, but 25% is a different ballgame. If 25% comes through, I think we're back to the posture that they had just a couple months ago on networks like this, where it is a significant concern. The consumer is not willing to take up their budget on these soft lines categories, apparel, footwear, accessories, those kinds of things. They have not been for several years. Their entire basket of goods is inflating with the tariffs coming in from China. They're not going to go and find more room for apparel. They're going to navigate, we think, to places like the off-pricers that have very good product at lower prices. Those are the kinds of retail occasions that are going to continue the trend of winning, if not accelerate the trend of winning.